Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday market webcast. Okay, so we had been fighting for two sessions between the 50-day exponential and the 20-day simple, the middle Bollinger Band, upper band, lower band, middle band, basically just the 20-day simple moving average. What the bears are trying to do now is convert the 50. The 50 is sitting at about 46, call it 67. If they can close below the 50, that starts to open up the lower band and the 100-day right in that 45-70 area. We've talked for a long time, almost a decade on here, about how the S&P, how the E-mini, how it likes to trade between the Bollinger Bands. So, back here, right after Christmas, we had upper band, middle band. What's next? Lower band. Before that, upper band, middle band, lower band. It's just the way things typically go in the bigger picture with the S&P when it's really a two-sided market, okay? And the middle band for us has always been the delineator of are we buy dips or are we sell rallies. Right now, we're in a sell rallies tape. We are absolutely in a sell rallies tape. About 4:35 o'clock in the morning, it came up into 46.75. Tested a whole bunch of stuff. Volume weighted average price, the 50-day, Madonna, our proprietary moving average, hourly mid-band, and the daily pivot, all between, call it 65 and 75. Made basically matching highs at the daily pivot, 46.75, and then started to glide to the downside, and then, come 7 o'clock, it really accelerated. These rallies, these bounces continue to be sold. And as long as they continue to be sold and create lower lows, which is what this one has done, we've traded as low as 46.33 this morning, the bears are going to stay in ultimate control of the tape. I know, I'll say it again. The bears are going to stay in ultimate control of the tape. When could that end? At any moment. At any moment, they could trip over a blade of grass or call the stupidest timeout in NFL history, which is what happened at about midnight, 12:30 in the morning last night. As a San Diego native, you love to see it. That's what I'll say. Anyway, the bears could turn into the bears again at any time at all. So sell rallies, take profits where you find them. But at some point, probably this week, we're going to start to recognize that, we're building higher lows, things like that. Don't fight price when the market wants to rally. In down tapes, people always talk about bear market rallies. It's not a bear market, okay? We've been going down for a few days. Settle down, okay? But in down tapes, there are typically violent rallies. What I have always said about these violent rallies is you can handle them in two ways. You can either be long or you can stand on the side. What you can't do is be early and short because they will chew you up, they will spit you out, and then price will come back in. Don't fight price. It's no different than any other type of tape. Don't fight price. If it wants to rally, go with it or get out of the way and then reload when it starts to come back in. And we'll be doing a lot of that in the room this week. We're flat now. I'm not around at 4:35 o'clock in the morning to be taking shorts. I'm asleep, so I have to live in the real world. But as long as this tape is sell rallies, we will look to when those down market pops, those down market rippers, start to kind of peter out, roll up stops, and then get involved on the short side. But we're not going to try to guess which highs are the high where that particular, bounce or big move to the upside is going to die out. Because the trap that people get into is they want to be in at the turn. No, don't be in at the turn. Let them have the first 10% of any move, and let them have the last 10% of any move. If you focus on the 80% of the handles inside of that move, throwing the first 10% out and the last 10% out, which means you aren't trying to pick tops and you aren't trying to pick lows. Your trading will dramatically change for the better because you're no longer trying to be the contrarian guesser, and instead you are trading with the move and you're not fighting it and you're not worried about when it's going to end. You're with it, and it'll end when it takes out your rolled up stop, which is usually at a number a heck of a lot better than where you got in. And we've been doing that for many, many years. You want to learn how to do it? Come on in and we'll teach you. All right. Hourly mid-band, 66.5. VWAP, 60. Proprietary moving average, 60. We talked about daily pivot, 46.75. Quick look at the hourly chart. You can see where it came up into all that. It started at the monthly pivot last night on the Europe Open. Then here they sealed off daily pivot. They've taken it down, and it's a lower low. I mean, they did good. The Bears did good. See the new weekly pivot, 47.0983, and the 20-day sitting right around 47.02. All that's going to get a look this week. I think we're going to have a nice, volatile week of trading. All right. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check us out, and I'll talk to you tomorrow.